Thank you, Mr. Kont, for sharing those valuable insights. Next, we move on to our second session, Equity Investments through Capital Markets. This session will include a presentation on the emerging market case study by Mr. Simon Olsen, partner at the Equity Capital Market Group, Deloitte. Following the presentation, we will have a panel discussion. The panelists for this session are Ms. Senidu Fanuel, Senior Private Sector Specialist at World Bank, Ms. Simon Olsen, and Mr. David Wainaina, CEO at Nairobi Securities Exchange. This discussion will be moderated by Ms. Yodit Kassa, Chief Business Development Officer at the Ethiopian Securities Exchange. Please welcome Mr. Olsen to the stage for the presentation. Thank you.
Distinguished guests, Excellencies, ladies and gentlemen, it really is my pleasure to be here at this inaugural Capital Markets Conference in Ethiopia. So much has been achieved already, and it really has been an honour to be part of it. For those who don't know me, my name is Simon Olsen. I'm a partner from Deloitte in London. I specialise in equity capital markets, predominantly IPOs, and I lead our One Africa equity capital markets team. This is a team of over 30 people spread across the African continent, from Johannesburg, Cape Town, up to Lagos, Nairobi, and now most importantly, we are building our capacity here in Addis. This team has completed over 25 African deals in the last 5 years and has been physically present in over 20 different countries. And something I'm particularly proud of, despite being spread across the continent and from London, I am the only British person in the team. It is otherwise full of African nationals. Now, as most of you know, our Deloitte practice here is led by my fellow partner Teddy, and it's now been 2.5 years since we started building our capital markets presence here. Our firm is very committed to this market, and I can assure you that I am personally, as evidenced by having had 27 separate trips to Addis in the last 2 years. Now, as a firm, we have worked very hard to become the market leader in this country, and there are a number of firsts that we have achieved. So we've been the first to become a licensed investment advisor. We are the lead advisor in what will be the first ever IPO in Ethiopia, that of Ethio Telecom. And we have written and had approved the first ever Ethiopian prospectus. More broadly, we've worked on building our own capacity. We have a team here that now comprises both local expertise with international expertise, and we are also recently opened our new office here with the launch event scheduled for next week. But this session isn't just to talk about Deloitte. So I'm going to set the scene. We're here today to discuss equity investment through capital markets. I'm going to start by setting the scene, then we'll look at a couple of case studies. So let's just have a quick refresh on what a capital market is, and I apologise that for many this will be obvious. So a capital market, put simply, is there to connect issuers, so people wanting to raise capital, with investors, people wanting to deploy capital. We have an exchange for that. Obviously here it will be the ESX when opened, and the exchange is there to provide the platform for trading, for liquidity and for pricing. The capital markets are always conducted in a regulated environment for which we have the ECMA, and that ensures they are transparent, consistent and fair and orderly. And I would also note that whilst this session is going to be about equity investment, the capital markets are also there for debt, as the previous presenter was talking about. When we consider equity investment and IPOs in particular, I think it's important to reflect on why does a company actually do an IPO? Why does a company come to a capital market to raise money? So the first reason, and that most commonly understood, is a company coming... Okay, is that better? Okay, lots of different tools to play with up here. So the first reason most commonly thought of is that we're raising new capital for growth in the business. So the company issuing new shares to raise cash for growth. We call this a primary raise. The second reason, and again most people will be familiar with this, is to provide a liquidity event for existing investors. So existing shareholders selling some of their existing shares for cash. We call this a secondary raise. And we've seen IPOs that are all primary, we've seen IPOs that are all secondary, and we've seen a complete mixture in the middle. We should also note that we have seen IPOs where there's no raise at all. So no existing shares sold, no primary raise. What we're seeing there is just merely the flotation of existing shares, and we call this an introduction. And I think in the Ethiopian market, we are actually going to see quite a lot of these companies coming to market by introduction, especially, for example, in the banking sector, where we already have shares very widely very widely held. Now, why do we do that? The reason is that an IPO, as the CEO of the London Stock Exchange, often likes to say, an IPO is not just for Christmas. Right? Once you're on the exchange, you've done your IPO, you have an ongoing platform to raise additional capital and for existing shareholders to trade their shares and therefore to sell down more. So by listing by introduction, you give existing shareholders the ability to trade and the ability to sell down. We should also, though, look at other reasons why companies come to the public markets. It's not just about equity investment and raising equity. It can also enhance brand and reputation. We see quite a few companies, especially, for example, consumer brands, those in financial services, coming to the market to enhance their reputation, enhance their brand. It also gives the business a liquid currency with which they can do M&A by paying with shares, or with which, for example, they can reward their incentives through long-term employment plans. Now, clearly there are things to consider. There's a cost to being listed. There's an additional regulatory burden. So it's important for companies to ensure that their reasons for IPO outweigh those things to consider. Just to quickly touch on a few common misconceptions, it's important to remember that IPO is a transaction involving shares, and therefore your shareholders are a very key stakeholder, especially where there is concentrated ownership. So, for example, in a state-owned enterprise where you have 100% ownership by EIH, or something like a family-owned business. The decision whether to IPO or not and go on the capital markets is most likely actually to be made by the shareholder, not necessarily by the board, although in practice it will probably be combined. The next thing I think that's important is a lot of people think of an IPO as an exit, a way of 100% sell down of the shares. Now, in practice, an IPO is going to be for a minority of your shares, typically 10 to 25%, so existing shareholders are still going to hold the majority of the business post-IPO. So for that reason, it's important for businesses to think of an IPO as part of a journey and a start, if anything, of the next stage of a journey, rather than an exit, as many think of it. We also need to recognise that different stakeholders and indeed different shareholders may have different motivations. They may not be financial. Some may be more worried about reputation and brand. Some may be wanting to stay in. Some may be wanting to sell. So you have to balance that. And I think lastly, the thing I would say is an IPO is a major undertaking for any company. We're going to talk about that in a later session. But I would just say here, it is going to be a major project. It's going to require planning and it's going to require resource. Now, I wanted to talk through two case studies today. The first I wanted to talk about is the Middle East, and in particular the experiences in Saudi Arabia, Dubai and Abu Dhabi. Now, as recently launched exchanges, I think these provide a very interesting case study for what can be achieved in Ethiopia. Now, if we stand back, the Middle East... There we go. If we stand back, the Middle East has seen considerable success. If we look, the markets there were only incepted some 6 or 7 years ago. But as we stand today, they now have a combined market capital in excess of $4 trillion, and they have over 400 listed companies present. So they've created, therefore, a capital markets ecosystem around it. Now, how did they do this? Firstly and critically, there was a very deliberate policy and momentum created by their governments to deliver on capital markets. This included things like economic reform, economic diversification, new legislation and regulation, and deliberate initiatives to build market infrastructure. We have very much seen that in Ethiopia. We have the ESX shortly to launch. We have ECMA already in existence. We have that program of regulatory reform and government momentum. Secondly, the government provided a big kick-start to those exchanges for an ongoing privatisation program of its state-owned enterprises. And what this means in practice is when you launch a new exchange, you're then forcing your own state-owned enterprises onto the exchange so that there are meaningful companies on the exchange trading. This builds an ecosystem. It sends out a message that this exchange is for meaningful, sizable businesses, and it also creates enough liquidity and enough trading for brokers, for others in the ecosystem to want to deploy into the country. And I think we're starting to see that here. Obviously, we've had the IPO of Ethio Telecom already launched, and hopefully we'll see further. But that should kick-start the ecosystem, and I know it's very much the government's intention to continue that. Lastly, as those exchanges have grown, we've seen harmonisation across the region, and also exchanges being included in global indices, and that must be a goal here too. But by following a similar path, one thing I do believe is that Ethiopia could quickly become a major exchange on the continent. The second case study I wanted to talk about is Ethio Telecom, where we acted as transaction advisor. Now, I don't need to tell you what Ethio Telecom is, clearly, so I'm not going to do that. But just to reiterate, the first ever IPO in the country, obviously its public offer is open at the moment, which is for 10% of its shares. And in a few months' time, when that closes, we then expect that to be the first ever IPO onto ESX, which will very much be a landmark transaction for the company. Now, this marks the first privatisation by the government. It follows their stated objective for the privatisation of SOEs. And this should be seen as a very major kick-start for ESX when it comes onto the market. A few things about it when we think about equity investment. This is a 10% offer to the Ethiopian public only. And this marks a very major objective of the government to ensure maximum public participation in the offer. Now, this is very common for state-owned enterprises. We've seen it across the continent with other privatisations. We see it elsewhere in the world. For most companies coming to the market, assuming there's an offer, not just an introduction, a lot of them will actually probably do a placing to institutional investors, high net worth individuals, those type of investors, probably not a very broad public offer, because public offers are actually quite rare on IPO because of their complexity and cost. However, we would probably expect to see some of the future SOEs coming through public offer, I think, given the government's objectives. We talked earlier about primary raises and secondary raising. We should note that the sale of Ethio Telecom is all secondary, i.e. these are shares being sold by EIH with no primary raise for Ethio Telecom, and this is in line with both the government's and EIH's stated objectives for the deal. It should, of course, also be noted that once ESX is up, shareholders will be able to trade their shares, and as I noted earlier, this will provide a future platform both for Ethio Telecom to raise capital if they want to through the public markets, or indeed potentially even do M&A using their equity. It also provides a future platform for EIH should they wish to sell down future shares in due course. The last thing I wanted to say, I'm pretty confident here that Ethio Telecom is going to be the first of many IPOs in the country, and I would repeat, I do see a huge opportunity for Ethiopia to have one of the largest exchanges in Africa. Thank you very much.
Simon, so you might as well take a seat. I believe the stairs are not designed for a very short person like myself. That's what I figured. Point taken, DG, on that. Morning, everyone. Good morning. Finally, some voice. So I think we're going to continue this discussion on the equity investment. So please help me with a warm hand, okay, very warm hand, to welcome my two speakers, Miss Senidu. See, stuck with the DG. So Miss Senidu, if you could just give her a warm hand. And back to the stage by popular demand, Mr. David Wainaina. All for joining us on the stage. I think I've been given a very hard task to kind of manage some very difficult questions in just 40 minutes. Where is Saron? I guess she's timing me. So I've got 40 minutes. The way I would want to do it is I just want to throw a few questions to you all, and then I would open up the floor for discussion to the audience to ask very precise and crisp questions, as they have been doing in yesterday's session as well. So just as I've been introduced, my name is Yodit Kassa. I'm the business lead for the Ethiopian Securities Exchange. Here with me, we have additional to Mr. Simon Olsen, Ms. Senidu Fanuel from the World Bank, and David Wainaina from the Nairobi Securities Exchange. So the objective of the session, if you were here in the morning, we had a discussion or a speech, if I might say, about debt market. But I have an easy task. I don't have to talk about debt. I'm going to be talking about equity with the experts. And the idea is kind of to draw lessons from what has been working in different markets, but also to share what has been done in our own market as well. So I would want to throw this question maybe to David to follow on what Simon has been saying. He's shared the why companies come to the equity market, the misconceptions and all that. But if you could just elaborate on that and share with us from your experience on some of the benefits, but also to show two sides of the coin, I would be throwing in some of the risks that companies have to look out if they are coming to these markets. But then following that, Ms. Senidu, I would want to throw this question to you, is relating this question further, how do you see this, or the development of the capital markets in general, if you want to having an impact in the economic development, particularly to our country, to our home country as well? So over to you, Mr. David.
Thank you very much, Judith, and good morning, everyone. Salam chu. So my name is David Wainaina, as you have heard from the Nairobi Securities Exchange. We are very, very happy to be here and working very, very closely with our brothers from the Ethiopia Securities Exchange, having signed a memorandum of understanding around 2 weeks ago. So to your question, really, what will be the benefits and the risks? Allow me to start with the benefits of listing equity, because they are more than the risks, so there's nothing to fear. First, when the company goes public, and I'm very, very happy with the previous speaker who has laid it bare, one, it is expected that they would have a very, very good governance structure. The management team that you put in place needs to be fit for purpose, to be able to drive profitability and to be able to drive growth of the company. So I'm sure your regulator here, the Ethiopia capital markets, will require that once the company goes public, they must put a very, very good governance structure at the board level, at the management level, and indeed at operational level, because it is expected that there are those key functions that you must put in place. The beauty with that is that it's a benefit to the issuers. Once a company, to the investors, once the company has that growth, the benefit is that they will be able to turn around their strategy, they will have good profitability, they will have good growth too. Once you come into the public space, you become a public company, as the word goes. What that does to you as a company, one, is that you have a lot of publicity, not only within the borders of Ethiopia, but also at an international level. And what that does is that it gives foreign and indeed local investors the opportunity to look at your company. One of the things, again, for you being public is that you will be required to give information, especially from your financial projection perspective. And what that does is that it gives you an array of other investors who are interested in your business. The opportunity here is that as a business, you're going to get an additional source of capital. And by virtue of being listed, then your rating, as it were, becomes better than a company that is not listed. What we have seen, again, from the experiences is that very, very small companies, we have one of the banks in Kenya that listed by way of introduction, a very, very small company. And when they became public about 20 years ago, now it's one of the biggest banks within the region. You can look for me to give you the name of the bank, but it's there. So from a risk perspective, ladies and gentlemen, of course, and again, I'm very happy with what has been put forward here, is that control becomes a very, very key asset as you list. Once your company goes public, one of the requirements of a public company is that anybody can have an interest in your company. So it could be, someone who has, interest in your company, gives you a very, very good offer that you cannot resist to take over your company through the mergers and acquisitions. It is not necessarily a bad thing, because that merger is a business transaction, and probably it would propel the business into to the next level in the best interest of the founding shareholders, who are looking at the exchanges as an exit mechanism. The second risk, as it were, is that, of course, and we have again heard here, is that the costs may be high, but again, remember that cost is covered by the way the business is growing. What we say is that, albeit the fact that the cost of listing or the cost of being listed seems to be high, your business will certainly be able to cover that cost, because at the end of the day, you are growing by virtue of accessing this publicity and alternative source of capital. So the point I want to lay here is that, one, from a benefit perspective, the benefits, as I have said here, are more than the risk. The risk can always be covered, because what we believe as capital market players, anything without a risk, what we have done from research, is probably only treasury, bonds, and bills. Anything else is a little bit risky that can be covered. Thank you.
Thank you very much, David. I think we've picked up the point. The reward would benefit the risk. So it's like cost-benefit analysis you can do for yourself, but from the COO's point of view, that's why you come to the market. But if I can follow on with that question with Ms. Senidu.
Thank you, Yodit. So picking up on the broader issue you raised earlier on the impact of listing in capital markets for economic development, I think, so a good starting point for us in Ethiopia would be, if you talk to any private sector, the biggest challenge they will tell you is that they have no access to finance. Financial sector is underdeveloped, the product offerings are limited, so there are a range of issues, right? So what this enables, at least from a private sector perspective, would be an ability to raise funds from a population of 123 million. Okay, maybe not everybody can buy, but you will have people, as they gradually progress in their economic income, who can participate. And then $1 adding it up to even 50 million will go a long way, right? So from a private sector perspective, it gives you a pool of resources that you can leverage to increase your capital. But then if you look at it from the economic development or from a country perspective, what would that enable is that at an individual level, for the retail investors, it means you have now a diversified means of income, right? So you have your salary or your small business, and now you invest it, you get returns. It also gives you options, right? For instance, in Ethiopia right now, your investment options are very limited if you have disposable income. You either buy bank shares, okay, now we have Ethio Telecom, and then if you're better off, then you have real estate. But what capital markets and listing of companies would enable is, for a small amount of money, you can buy small pieces of shares in different companies, diversifying your income, meaning minimizing your risk as an individual, therefore increasing your income, and then investing on your kids, further investing your resources. So even at an individual level, it will be transformational, having that platform where you can put in your disposable income. The second part would be, if we look at, for instance, from the government side as well, we spoke about SOE listings. So there is a benefit of listing SOEs in the capital market, which is slightly off topic here. But one benefit that will bring is that now you will have SOEs where people can invest in, but more importantly, where the SOEs can raise funds. And as was being said, capital markets will force you, for instance, to comply with regulatory requirements, right? So you have financial statements that you have to produce, credible financial statements, timely financial statements. You have to be transparent. So what that would enable is for the public to have a say in terms of how government manages its own enterprises. On the SOE side, what that will do is, in addition to raising capital, it would put a little bit of more discipline in terms of your governance, because you need to comply with certain requirements. You need to bring in competent management because you can't fail. It would also mean, hopefully, that you're more efficient and you can deliver better public services, right? So if you combine all these things, on top of the fact that capital market by itself is an industry, is a huge impact. So, for instance, the slide Mr. Simon presented on the players in the ecosystem. So you're going to need a lot of qualified accountants. You're going to need auditors. You're going to need valuators, brokers, hopefully underwriters. This is a whole new set of industry. So that by itself, in terms of job creation, in terms of income, would be significant, if looking at it broadly. Yeah, thank you.
Thank you, Ms. Senidu. I think it's quite interesting how you have related both sides, the investor side and the issuer side, brought to life how that individual impact would actually come to that broader economic impact in terms of employment, in terms of the word that has been popularly used yesterday, for those of you who are not here, democratization of the sector, popularly used by the DG and the state minister as well. So that's kind of the sentiment I'm getting in this as well. So thank you very much. Simon, I want to come back to you again. You've mentioned some of the recipes, if you would like, or the pillars in terms of how capital markets can be a success story. And you've brought good examples as such. I guess my take is taking that back home, because now that you've come here, done the Ethio Telecom journey, I'm sure it has given you an exposure into the equity market as well, locally. So I think it would be an interesting topic to discuss while doing that journey, what you have picked for potential issuers that are thinking of coming, and related to the regulatory frameworks as well. What were the, what's the market looking like? What's the equity market at this stage looking like? I would give that to you. Thank you.
Yeah, thank you. I mean, I think this is going to be a very exciting journey in the coming years, certainly the first 2 years, as we establish market precedent and establish exactly what Ethiopia is going to look like as a capital market and what it means for Ethiopian businesses. Because I think one of the things I've learned is to Ethiopia's considerable credit, whilst you look to international experience, you actually also look to do things differently and look to innovate. So I think it's going to be exciting to see what happens here. I think the basics for businesses in terms of what's going to make a successful IPO, what's going to make success, actually though, you probably can get good read from international precedent. I think there's a lot around, number one, just make your business as good as you can make it. A lot of people try and almost reverse solve for an IPO. In practice, you need to just make your business the best business as it can be, and your equity story and the reason why potential investors will want to invest will come from that. But talking to some slight more practicalities, as a business, we need to see people really think through, why would someone want to buy my shares? So you need to develop your equity story, develop the reasons why you would sell your shares to someone. So imagine yourself in front of investors. What are those messages you would tell them? What KPIs, what data would you give to people? Really nailing that is so important. Also think through, who are my potential investors? And who are they likely to also be invested in and looking at, and therefore who are they going to compare me to? Because a lot of public markets is about comparables. So if we look at Ethio Telecom for a good and fairly obvious example, the world of telcos is actually quite small. There aren't very many in each country. So when we look at the valuation of Ethio Telecom, one of the things that the company did was to say, okay, what's the value of Safaricom? What's the relative value of MTN, other MNOs around the continent, and maybe others in other emerging markets, and then apply that to your own business. Also look at how they sell themselves. How do equity investors look at those businesses? What do analysts write about the businesses? Try and see it through that lens. But I think, as I said, I think it's going to be very interesting to see how this unfolds in this market.
While you still have the mic, I guess the question that would come to people's mind is around the framework, the policies, and you've navigated some of them. So I think, it would be a good tip for people if you could just point out, look out for this. These are the things that you should be looking at if you're coming to this market.
Yeah, and then we'll talk about this, I think, in one of the later panels as well. But the regulation here in Ethiopia is still evolving. As we've gone through the process of Ethiotel's transaction and getting the first approved prospectus, I think there was a lot of learning, certainly for us, but also for a lot of other people in the ecosystem. And on the back of that, I think we have much improved regulation. And indeed, the good news for everyone is we have some precedent now, so we know where we're heading. But as with any IPO, when a business comes to the market for the first time, there is a lot of work to do. There's regulation that you have to comply with. You have to get prospectus out there. You're likely to have to upgrade your governance and internal controls. And people like Deloitte can really help you understand what that means, what that journey is. In Deloitte, we like to say, it's daunting but doable. There are tens of thousands of listed companies in the world, so we shouldn't be scared. We should embrace it. But as I said when I was presenting, it does represent quite a big undertaking for a company to go through an IPO. So you need to plan, understand what's needed, get enough resource in place, understand the time scales required, understand the work required, and then proceed accordingly. I think one of the mistakes we see people make globally is underestimating the work required.
Thank you, Simon, for that point. I think I've taken the word, it's daunting but doable. That's the catchphrase at this. I hope it's not a tagline for Deloitte, so we're going to use it somewhere.
It is, but I'll let you take it, it's fine.
Fantastic. Done here. So, Ms. Senidu, I want to come back to you, because you touched on one point around the SOEs. And while we're talking about issuers, obviously, we're not only talking about the corporates, but we're also talking about the public sector coming to this market as well. And relating it to the work you and your team has led in the World Bank, supporting us in the exchange, the ECMA as well as the IH, regarding the readiness assessment. I would want to pick, if you have 1, 2, or 3 top lessons you've taken that you think, in your view, are critical and important for companies that are thinking, entities, let me define it rather than saying companies, that are entities that are thinking of coming to this market, should look out. What were the takeaways, like the key pillars you think, before taking this IPO journey as daunting as it is?
Thank you, Yodit. So just to give the audience a little bit of what we're talking about, as part of the SOE reform work that the government has been undertaking, we've been looking at the possibility of listing SOEs in the capital markets through the guidance of the Ethiopian capital markets and Ethiopian Stock Exchange. So we've been supporting that initiative, just to give you a context of what I'm going to talk about. What the government had tried to do, this is based on what other countries have done as well, but also taking into our particular context in Ethiopia in terms of how many ready private corporate businesses there are. And also because there is a lot of learning, the initiative is to try to test the market with state-owned enterprises. Ethio Telecom is one, but beyond Ethio Telecom, what are the enterprises that the government owns, the federal government owns, that can be trailblazers, but also there is a lot of learning that needs to happen, right? So the government, with our support, undertaken an assessment of 5 of its enterprises to see how ready they are when ASX comes to market, how ready they are to be listed or to issue their first offerings. So the key takeaways, and this is specific to state-owned enterprises, so I want to caveat it because it's not the same with private enterprises. The biggest areas that they need to work on is around governance and management. This is because it's twofold, right? One is that the government is 100% shareholder. So in terms of governance, the government fully controls, right? So that's one thing that they need to work on in terms of how they want to position their enterprises and how much of their share and with what arrangement. And of course, there is a compliance requirement from stock exchange. But even if the case of SOEs might be a little bit more difficult, it applies to private enterprises as well, right? So, for instance, in our case, most of the corporations are family-owned or individual-owned. What this would mean is, before listing, this governance and management arrangement has to be changed in a way that it provides assurance to investors that this is not a one-person show, for a lack of a better word, right? So governance and management is a core issue. And then the second one is in terms of at least IPO readiness. I go back to the point Simon made in terms of being prepared for it. It takes time, it takes money. And I don't think it should be underestimated in terms of the effort and the resources needed to get a company ready for listing. The third point would be around financial reporting. It's a big issue in Ethiopia in terms of compliance with international standards, but also in terms of accuracy, in terms of transparency, and in terms of timeliness. An investor would want to see the most latest financial statement with the pace of current pace of financial statement preparation and audit, whether it's in SOEs and in private enterprises. I think that's one area where there's also needs to be a lot of work, particularly with SOEs. So that would be the third area. The fourth would be risk management in terms of issuing, going to the public, because it means less control, it means more compliance, burden of compliance to regulatory requirements. It means bringing in expertise to help you prepare. So these are at least the top four that apply to SOEs, but based on what we know also would translate to private sector as well.
If I could maybe add a fifth, which is actually very linked to 1 to 4, so very much building on what you've been saying, capacity building and training is really important. I think now this applies to any business going through an IPO anywhere in the world, but I think in the Ethiopian context where capital markets are new to everybody, the need for capacity building and training should not be underestimated, in particular amongst the board, the executive committee or senior management, and then amongst the finance function, the legal or company secretarial function, and anyone responsible for regulation. You know, this capacity building and training will take time, and it's important that it's done properly so people actually understand what it means, and in particular understand what it practically means for them day to day in their operations, what they can and can't do, how the business will have to change, the deadlines, what the rules mean, etc., etc., etc. That cannot be underestimated. As I said, very much links to 1 to 4, because you can't really achieve the first 4 without the underlying training.
Absolutely. Thank you, Simon, for that, and Mr. Senidu as well. I think we've taken 5 key points, right? It's about governance, it's about getting your books straight, and I promise it's not the accountant in me speaking about that. It's about compliance, it's about risk management, but above all, to make this a reality, it's about capacity building. That's the key takeaway I'm taking from this. So I want to change gear because we've been so focused on the issuer side of things. From the equity investment side, we're forgetting the other side, which is the investor side. I know we have a session following this to talk about in deep dive about this, but since David started it in terms of our MOU, which we have signed, which focuses purely on this one, I do want to ask a few questions in terms of, you know, how companies should actually be attracting and retaining investors. I think Simon has mentioned the equity story all the time, but really what has worked in your market in terms of attracting and retaining investors?
Asymmetry. One of the greatest assets that we must protect once this market comes to play is how information is distributed so that we can ensure that all investors are getting the material information at the same time, so that there is no issue of information asymmetry. And I'm sure there are guidance around how that can be done. So the point here is that even as you move forward, the issuers that come into the market should be required to have some form of investor relations section. This investor relations section speak about finance, their finance strategy, their strategies that they are pushing forward, so that one of the experience we have seen is whereby the issuer is saying, based on the great things they are doing strategically, the price is not reflective. Why is that challenge? Because there is no communication. So your investor relations section must be deliberate, giving the information on time, so that the market never lies. They will price your company based on the information at play. So if you don't give the investors this information, then your company might be underpriced, and that is a key risk from a management perspective. Finally, investors like to be supported by issuers, especially when they have your usual general assembly. You must figure out from technology, how do you ensure that at least over 50% of the people in the register are participating in your general assembly. As the capital markets comes to play, the decisions will be guided by the shareholders. Please ensure that during the General Assembly they are participating, and now that we have technology, they don't have to come to Addis for an AGM. You can have e-AGM solutions, and I'm sure Ethiopia can have one for any issues that comes to the market. Thank you.
I think the last one is a call to action for the regulators seated in terms of the AGM being able to be done electronically, as a question for everyone, I guess. But I think we've taken the points in terms of information, disclosure, education, capacity building. I could keep on asking my excellent panelists more questions, but in the spirit of democratization, I would want to give the floor back, but I would not be a full democrat. I'm going to be a bit of a dictator and do this. For the first 3 rows, I'm not allowing you to speak just because you have been listening to us too much. So to ensure that we have been fully listened to, I would be picking questions from the back far end, but I would be picking 3 questions. And if you could kindly tell us your name, where you came from, the question to whom you want it to be addressed, and as I said, very crisp question, right? It's going to be to the point. So let me give the floor. Okay, I've got one hand up to the gentleman there. That's still 3rd row. I'm not allowing 3rd row as well. 3rd row. It's just 4th row. See, you've been listening to me, so no. But if you could give the gentleman, okay, I'll come back to you. If you could give the gentleman there the mic, and I'm waiting for one lady who would be asking. You decided to sit in the 2nd row. No. I'm good, but you would allow me, right? Yes. So 3rd would be from this section. So if you could give the gentleman there, the one with the green, yes. And then next is the gentleman sitting in front of him. So your name, where you're from, and the question. If it's more than 30 seconds, I might be a rude person on the stage. Don't make me look rude and interrupt you.
Okay. My name is Haptamu Shatu, an individual security investment advisor licensed
Pleasure.
by ECMA.
Pleasure.
My question is directly to David. We have a business here mostly owned by family. So did Kenya face the challenge of hostile takeover? Have you experienced that? And what was the lessons learned?
Fantastic question.
That is good.
Thank you, Atop. So to the gentleman in front of him, and I'll come to my lady in yellow.
Thank you very much. My name is Isak Taka. I am from Agar Microfinance Share Company. My question goes to Mrs. Senidu. You have mentioned capital market as an industry. In Ethiopia, we have financial sector, financial institutions-led financial sector. How do you think in short term, in long term, and the medium term, the capital market and industry take the portion of this financial institutions-led financial sector model? Thank you very much.
Thank you very much. So it's about how big is our
thank you so much for your beautiful discussions and gives us more insights on the market actually. I am Senidu Fanuel from Unity University. I am the former worker in the big financial industry, Commercial Bank of Ethiopia. now I am joining the teaching industry. My question is about, you have repeatedly raised points about the cost issue, the information issue, again the shortages of finance for small industries, because there is a barrier, information barrier between the investors and the investees. My question is all about how in our country, in our case, there is a higher information barrier actually. How can we break up that and go to meeting those two individuals who seeks the fund, and as well as who is interested to fund the companies? Because in our country, the telecom industry is not still that much covering the whole country. And more of our pupils are in rural areas where there is no such facilities still. So how can we benefit from such industries by listing simply the industries who seeks the finance? My question is that.
Thank you very much. So I would forward the last question to Simon, because it's basically about
a family business-owned businesses. From experience, one of the biggest challenges that they have, one, is that they don't want to lose control of their business. And number two, once the founders come up with a very, very good business, and now they want to transition the business to the next generation, we call them next-gen issues, then there's a problem of transition in there, because you can have set up a very, very good company, but your kids or whoever you want to hand over to, they have no interest of the company. So as soon as you are not managing the business for one reason or the other, then the business also fades with you. So that has been a very, very great experience, challenge with family-owned businesses. And from the journey we have walked also, we have seen that the family-owned businesses are actually extremely large with very, very big and huge business cases, but they don't want to face the market directly. So the interventions we have put forward is that, number one, from a capacity perspective, there has to be a deliberate program that is speaking to these constituent of family-owned businesses, so that from where the exchange or the authority sits, you come up with a sort of an acceleration an induction program, so that you teach them at that level what does it mean to have a proper governance structure. And the way we have formed it is that we have ensured that the ecosystem, the people who will be advising are, they come with terms that are dictated by the exchanges and the authority, so that we make it extremely cheap for these companies. Now, once they go through that incubation and acceleration process, two things happen. One, some companies will be exchange ready and they'll actually list by way of introductions. Others will say, we still have some fear, we don't want to go directly, but we still want finance support from a funding perspective. And what we have done, therefore, is that we have created some sort of special purpose vehicles that can be listed on the exchanges. They raise funds to support these companies that have gone through such a program. That works very, very well, because what happens is that the financiers also know that having gone through these programs, the companies are capital ready. Because one of the other challenges is that you get a company, family owned, they get some support, they have challenges in utilizing those funds. So that's the approach that we have used by having programs that will feed into the listing pipeline by way of incubation and accelerating them. But they need to address their next-gen issues, they need to address their control issues, and that program is very, very important, because it enlightens them that it is better to have, instead of having 100% of a company that is 100% brr, 100 million brr, it is better to have 75% of a company that is worth much more, and ultimately the original, as Simon said, the original owners of the company has a bigger cake of a better managed company. Thank you.
Simon wants to add something on that, I guess.
I've completely agree with everything you just said. Maybe just to add a few things, because we've dealt a lot with these situations, both helping issuers and helping investors. I think when you list a family-owned business, something investors are going to really want to understand is what is the ongoing interaction with the family. So what are the related party transactions going to be, and what impact could that have on the business? So for example, we see cases where the family says, well, I want to IPO this business, but I'm going to retain the right to the brand name. I'm going to retain ownership of assets and rent them back to the company. All of these sort of things, which can then mean for an investor, you start to say, well, okay, but then this family potentially has conflicts of interest. How will that impact? So I think working through those is important for any family-owned business considering IPO. The next point I would make is quite often a family will own a variety of different businesses, and you actually need to think about, are you wanting to effectively IPO the family, i.e. IPO a conglomerate, and that can get complicated because you're then IPOing a bunch of businesses that may not be that well aligned, or actually do you want to just IPO some of the assets that you have one by one, which is then a very different proposition. So I think you need to think through what do you actually want to do in that regard. And the last one that I really would reiterate is the family has to be satisfied that they want to go into a listed environment, which means fundamentally they're going to lose quite a bit of control over the business, but also have to run it and govern it in a very different fashion. So families really need to get their heads around that. You know, they're no longer just going to be able to pick up the phone to the business and say, transfer me money, do this, do that, move things around. You know, you have responsibilities to your wider shareholder base. So it's going to fundamentally change the culture and how you run it.
Absolutely. While you still have the mic, I might just ask you to address the question, but I think we've taken points and notes around what you've raised in terms of how family-owned businesses really need to think through when coming to public markets. Thank you, David and Simon. But the next question, if you could just address it. The last question.
Yeah, in terms of information flow. Yeah, I mean, I think this is something that will evolve over time, and it's a very good question because this has been a challenge in quite a number of other jurisdictions where we've seen this. I mean, I think the first point I would make is there is regulation introduced by the ECMA and by the exchange, which will in many respects force the sharing of information, and that is very important. And that's why earlier I talked about capacity building with issuers, and I think we need to do capacity building with investors, as David said earlier, for people to understand what those rules and regulations are so that issuers know what they need to do, but also investors know what to expect. I think the other part of capacity building and education on both sides is actually going to be educating things like the financial press and other important players in the ecosystem so that they actually understand what to expect and they know what to be reporting and how to help the ecosystem understand that. The other thing I think we can do is draw on regional precedents and international precedent in terms of best practice for making information available, what technology or resources can be used to make information readily available for people. In today's world of websites, you can have portals. Actually, it's quite easy to make information readily available as long as, again, we come back to educating people on where it is. And I think the interesting thing for me as the system evolves in Ethiopia will be, well, what precedent and what can become the typical norm for sharing information, and actually how can we potentially improve on what's done regionally and internationally, because we're creating something from scratch in today's technological world. It may well actually be that we can do something that's better than a lot of established practice.
Thank you so much, Simon. Senidu, the last question is about the pie question, about the financial sector and the capital markets. I have my views, but I do want to see what you say about that.
Maybe you want to start first?
No, Senidu, it's all yours.
Okay, thank you. So that's a very good question. I mean, even for us who had been tangentially connected to this agenda the last 2-3 years, it's been a lot of learning in terms of what's lacking in the Ethiopian economy, in terms of establishing capital markets, the stock exchange, and all this stuff we're talking about, issuing IPO and stuff. So when I say industry, at least based on what we know so far, and I'm pretty sure there will be many that will emerge, especially around knowledge and services. For instance, if you take financial statements, IFRS compliant financial statements, how many produce it? Do we have accounting service providers, looking at Yodit, who actually can provide a credible IFRS compliant financial statement? That by itself is one player, accounting. And yesterday there was a lady from Bahardar University who actually asked, there is a disconnect between accounting profession as an education and accounting profession as a practice. So we still have a lot of work to do in that space. So accounting, auditing professionals, mainstreaming this in the education system, and hopefully what comes out of that as players in terms of advising firms, producing financial statements, auditing, valuation. Another challenge we had with the piece of work we've been trying to do is the lack of certified valuators. We have 4 of them in Ethiopia at a different level of capacity. So imagine you trying to list your company and where are you going to get these valuators? Because that's what your investor will look like. Any educated investor would look at your balance sheet. Where are you going to get this? We don't have it. So that's a whole set of new generation of businesses in Ethiopia that we have to look at. Investment advisors, brokers. So my hope is that maybe younger generation will use this opportunity to step in first and come in, and there will be learning, there will be mistakes, but the system itself will clean itself up, hopefully, in 2, 3, 4 years, because there is no other option if we want the stock exchange to succeed. So what this also would mean would be this dominance of the financial institutions in terms of financing instruments, in terms of being the investment advisors, the risk setters would dilute, because now you're going to have multiple players looking at very specific topics and defining what that looks like. I think rating was also raised. I think that would be a different game changer if that happens as well. Right, so gradually what we move, hopefully will happen, is you'll see a dilution of finance away from the banks and the MFIs towards capital markets, towards innovative instruments. It might be private equity, but a different set of players where the financial sector does not dictate the terms of how finance is managed or operated in Ethiopia. Just a final point on this is, given the lack of capacity we've seen, kudos to the Ethiopian capital markets who has taken upon itself to set up a clinic to help at least the first entrants, be it private sector or SOEs, to help them think through their readiness to issue an IPO. But this is, at least my understanding of it, is this is being undertaken because nobody else is doing it. So ideally, you want the market to develop and get ECMA out of this business of helping businesses become ready. At least that's my hope. But I'm happy at least they're stepping in, because there is nobody else who can provide this service locally. I mean, you can get them from the region, but good luck with foreign exchange and the fees. Yeah.
This Senidu's closing was just the 2 point. I guess what I took off is, and I put my opinion on this as well, is it is complementary. There is an opportunity with the introduction of the capital markets that would complement your business. It's not a competition. It's not a competitive environment. There is actually a business angle you could look at it, is what Ms. Senidu has been pointing out. And also, I mean, the ECMS job, she's asking you to take it off their hand and make money. I'm sure Simon is taking note of that and saying, like, we're here, but that's for all of us. That's the big pie we need to consider, is what Ms. Senidu is saying. Simon?
Yeah, I think I completely agree with what you've said, actually. I know there'll be a little bit of advertising in what I'm about to say, so forgive me. But I think it is actually really important for organisations to draw on international expertise, but to use that to build their own capacity and augment their own capacity. So, for example, there's a big Ethiopian diaspora that's got built up a lot of skills and experience in overseas country that maybe could be enticed back into the country to help banks, insurance companies. I know the ECMA, for example, has pulled on some international experience. There's plenty of that people can do. In our own firm, Deloitte, one of my roles is to actually build our capacity here. So we have a team that compromises international expertise from me and people like Lamy and Matt, who you've seen here. But we've also already building our capacity. Teddy's had a very rapid learning on capital markets in the last 2.5 years. But also Messiah, director, and we now have 4 people, all Ethiopian nationals, in the team here who we're training up. So I think it's incumbent on everyone in the ecosystem to do that, because you've got to combine it, because actually you want to see Ethiopia stand on its own 2 feet, because I would agree with you, relying long-term or even medium-term on international expertise doesn't work for any number of reasons, and including expenses.
Absolutely. So Saron has been, sideballing me, telling me you're done with your time. As the MC, I need to honor that. But in closing, rather than asking them a summary of their views and opinions, I have a very quick fire question that I would ask each one of you to answer in one word or a phrase. That would be a summary, if you would like to say it. So, what is the single most important factor that you would think would be driving the equity market in the next 12 years? It doesn't have to be about Ethiopia. So, David, to you. And then I go to Simon and Senidu.
Technology.
Fantastic. Simon?
And I'm going to give this in an Ethiopian context, but building critical mass.
Critical mass. Fantastic. Ms. Senidu?
My word would be credibility. Credibility in terms of the market, in terms of regulations.
That's the bigger goal, isn't it? And my last closing question would be this. If you want the audience, out of the full 1 hour, what you have said, to take a phrase back home, what would it be? And a phrase only in this case. David?
Should have started with Simon. So, the capital markets provide you patient capital for expanding your business.
Fantastic. And Simon? You can't steal David's.
You've literally just stolen what I was going to say. So I'm going to revert back to the Deloitte catchphrase of daunting but doable.
That's that phrase. Mr. Senidu, what would be the phrase that you want the audience to take out of the session?
A lot of opportunities, but also a lot of learnings for all of us.
Fantastic phrases. Please give them a warm hand. Thank you very much for the time. And let me give it back to the MC. Thank you.